battling the relentlessly negative doom and gloom news media. It's the Nick Stenger Show, coming to you live from the Stenger Family Office headquarters. It's your host, Nick Stenger.
All right, ladies and gentlemen, welcome back to the Nick Stenger Show. My name is Nick Stenger. We are Stenger Family Office for the past 43 long years. It's been our mission to deliver both clarity and confidence to help secure your financial future. It is a Monday morning as we record this show, a little bit earlier than we normally do because I will be in Houston visiting with some of our ExxonMobil families this week. And it is really the crack of dawn here at Stenger Family Office. Producer Owen is a little tired. Hopefully he's still awake here for this week's show, episode 157. Hard to believe we are rolling into August. We are also quickly approaching Investor Day 2025, but it's this year, as you know, this November 7th and 8th, downtown Naperville, Hotel Indigo, headlined by the legendary Dr. Ed Yardeni. He is just absolutely phenomenal. You got to see him. You got to come out for Investor Day. It is 60% full now. I'm not sure if I should even keep plugging it here on YouTube and the podcast because we have only sent out one save the date reminder. So make sure you get on that thing quickly so you get a spot. I would imagine by the next time we send that second email invite out and the hard copy invite to your house, there is a good chance it will be full. So if you're listening, watching the show this week, don't forget to register. I guess we can't put the link in the YouTube description, but if you go to our website, stengerfamilyoffice.com, go over to Insights, there is a tab for events. You can register there. You can also register if you are an iPhone or Android user. You can pull up your camera. You can take a picture of this QR code in front of you and register while you're watching today. So again, thank you so much for being here. Don't forget to subscribe, to share the podcast, the articles with your friends and family. I think we are just getting heated up here. Things are just getting started. What we saw with President Trump, the assassination attempt, was really just the tip of the iceberg of what is coming the next couple months. So just brace yourself. We saw the CrowdStrike outage last week. All the computers, for the most part, went down. So that is a concern. We've got a lot of little things coming up, I think, maybe a couple of big black swan events where just be careful of who you're listening to, what you're watching. If you're listening to the doom and gloomers, the people that say the sky is falling, be very careful because that stuff can get you off your plan. What you consume will ultimately be what you do with your portfolio. If you're listening to doom and gloom, if you're listening to the pessimists, the people that say the world's coming to an end, you will probably panic, sell your stocks, buy a bunker, fill it with canned food and gold and a water filtration system, and never return to the stock market. None of that's bad. Water filtration is good. It's kind of nice to have a few gold bars, maybe canned food. Not a bad idea once in a while. But the bigger thing is, over the long run, stocks will produce the best returns. They will return to all-time highs. We just hit an all-time high in the S&P 500. 5650 was the peak level. We're down just a touch from that all-time peak, about 2.5%. Not a major pullback. It feels a little scary when you see them because we haven't had one like that in a little bit. So just brace yourself, prepare for probably a little bit more. I think by the time this is all said and done, prior to November, there's a good shot we see about a 10% pullback all in. That's going to push the S&P back in the high 4,900 zone, 5,000 point zone. So don't panic over this. Use it as a buying opportunity. And by the way, I think if we do pull off that 5,000 level, that is just a screaming buy, especially if you're a long-term investor. I told you this last time around when we got into bye-bye baby in the fall of 2022, and the S&P was down 20, 22, 23% at that point. I said, buy as much stocks as you can. Stocks will come back and they will make a recovery. And you did, and you made money if you were our client. Don't panic over these corrections. The bear market is the time where you make the most amount of your money, even though you don't know it at the time. That's Shelby Davis with the famous quote, stay on your plan. Do not panic. Again, I think we have some volatility ahead of us. There's no question we're going to be in a heated election season. There also is the 79 days between the presidential election and the inauguration. We could see some volatility there. So just brace yourself mentally and do what Warren Buffett says. Just sit there and do nothing. In most of life, the answer to our problems and volatility is don't just stand there, do something. That's human nature. But with investing, it's quite the opposite. As Buffett pointed out, don't do anything. Just sit there and let your portfolio go down and let it come back up. If you've got some cash on the sidelines, that's when you put that money to work. But I will point out that's why we've been very careful with the fixed income allocation for our clients. And we don't like the long-term bonds. We don't want to take risk in the bond portfolio. We like the 30-day short-term high-quality U.S. Treasuries that are now paying 5.5% interest risk-free. And you don't have to worry about losing principal when markets are volatile. Make sure in the portfolio that the conservative side of the portfolio is conservative. It's being a ballast for you during the downtimes. Make sure the growth part of the portfolio truly is growing, keeping up with inflation. And it's not just in all these zombie companies. We mention Walgreens all the time, not investment advice, not telling you to buy it or sell it, but just a great example of a company that has really mismanaged. Yes, it pays a dividend. Yes, it has all the, they've got all these stores. It used to be a blue chip and all that. We used to own it for clients, did very well on it for clients, but things change. And that's why you have to be rebalancing. That's why you have to be watching your portfolio. You have to be watching the direction of industries and trends and be reading all the top research and not just statically hoping everything works out. So I don't want our show to sound like, hey, Nick isn't watching things. They don't really care what happens. Everything is, everything's going to be roses and sunshine. That's not what we believe at all. We believe, though, that equities over the long run will outperform any other asset class. However, within those equities, there are going to be rotations over time. You're seeing this happen the past couple of years where energy has made a big comeback. Financials are making a comeback this year. Technology had a really tough year in 2022. Now it's just coming back. A lot of technology is not back to the record all-time highs of 2021. So this is where that rebalancing, the rotation through the sectors matters, and you just have to be on a disciplined plan. So it's not to say that we are just going to not worry about anything. We're going to prepare for a rainy day. We're going to prepare for downside, but we can't over prepare. If you over prepare, you will stifle your growth. Companies have run into this. And remember, CEOs, management teams, they behave very similarly to you and I. Remember Jamie Dimon over here at JP Morgan, which, by the way, has done a phenomenal job and one of the best performers on our portfolio. We highly respect him. He's one of the best CEOs ever to do it. And Jamie Dimon always talks about a potential economic hurricane. Now, I don't think that's going to happen. I don't think we're going to have these economic hurricanes like this year, for example, like he says. He said it last year, said it the year before, but that's okay. That's what you want from the biggest bank CEO in the country, is to be doing risk management. But a lot of CEOs in other industries over prepare. They not only batten the hatches, they not only pull out the umbrella, but then they also build the bunker like a lot of our friends and family will do, and then they don't grow. And then eventually the economy does take off. It's not as bad as people think, and they're not in a position to grow. A great story or a great example of this would be Tillman Fertitta in 08 and 09. He had Landry's the hospitality company, and he had a lot of cash on his balance sheet. If you ever read his book, it's called Shut Up and Listen. Really recommend it. Really, really good book. He talks about this, how he had cash. He's a risk manager. He has to be careful that when there is a rainy day in the stock market or the economy, if we have a recession, he's got plenty of cash to come in and buy. That's exactly what he did in 08 and 09. He was buying from people who were much weaker, who did not have risk management in place. That's what you want to be. You want to go on offensive when everybody else is on defensive. And that's where I believe we're headed. We're going to go into a defensive mode where people are panicking. They're worried about their stocks. They're worried about the economy for political reasons, and they're not focusing enough on policy. So that's the point of this week's article. Biden drops out to talk more about policy. Policy matters a lot more than personalities, than politics, than the person in the Oval Office. Obviously, the person in the Oval Office matters because it can influence the direction of where the country goes. But the U.S. moves slowly forward over time thanks to our checks and balances, thanks to the divided set of government that we have. We have the three branches. We have the judicial branch. We have the legislative branch. We have the executive branch. One of those branches may get out of whack once in a while, and all of Congress can move really far over to one side. That political pendulum can swing throughout history, but the U.S. does okay over the long run compared to all these other countries because we really don't have these massively wild swings in policy like you see in emerging market countries. The most critical factor to focus on is the direction of tax rates, the direction of interest rates, the direction of regulations. We talk about tariffs once in a while. We talk about government spending. Government spending is a huge deal. It's not debt, because debt is always balanced against assets, just like a company. You could say, Nick, this company is so scary, it has $1 billion in debt. But before we answer, is the company in bad shape, we got to say, well, what are their assets? Maybe their assets are $3 billion, so they're totally fine. They can pay off that debt over the long run as long as their income grows. If you tell me, Nick, the U.S. government has trillions of dollars in debt, which it does, I'm not arguing with you there, and I think we do need to get that under control. It isn't a today problem necessarily, because we still have all these government assets and we have tons of net worth. Actually, U.S. household net worth, this is a crazy stat, is literally higher than GDP. So there are some economists out there that jokingly kind of say we don't ever have to produce another dollar in GDP in the United States because we've got so much net worth right here. And obviously that's not exactly correct, but the idea is that we do have so many assets. So debt really isn't a current problem, it's a future problem. And if you don't grow your revenue and your income, your GDP, you will have a problem. So we watch the direction of these things. And what matters most, and I tell you this on the show all the time, is it's not about today, it's about next year, it's about the year after, it's about the future path of all these things. And so it doesn't matter if interest rates and tax rates and regulations are good today. It matters where are they going to be going. And I will also point out the fact that really good policy, when you do get regulation under control, you do get tax rates under control, you kill inflation, you have a thriving economy, really good policy can literally last for generations. And what I would point out is Ronald Reagan. Ronald Reagan came in with the help of Paul Volcker. They killed inflation that happened under Arthur Burns and Jimmy Carter, and really before that under LBJ, as we pointed out in the past as well. They got inflation under control. Ronald Reagan stood there in the Oval Office with the stack of regulations all the way up, and he said, we're going to get a lot of these Federal Register pages down to a more reasonable zone. And then he also got tax rates to moderate. Now, they did spend a lot of money. There's no question about that. The deficit did go up under Reagan, so that's a negative. But a lot of the good policy that Reagan put into place is we're still benefiting from today, quite frankly. And then I would even fast forward. This isn't just one side of the political aisle. It can happen from both. Bill Clinton came in with all these leftist ideas, a lot of pro big government ideas. And then he was forced during the midterm elections to work with a divided Congress. Again, that's why I say division in Congress is good, not bad. It's good to have divided government. And he was forced to cut taxes, cut regulation, and to actually balance the budget. And so we had good policy under President Clinton that led to the tech boom, I think, of the 90s, and has really still been a positive tailwind for us today. And despite the past couple of presidents, we've had President Bush, a big government, big spend, tons of bad policy out of the Bush administration in the early 2000s. Same thing happened with Obama. I mean, Obama was like literally the exact same policy president as Bush was. Obviously, little differences here and there with their agenda, but a lot of the actual enacted policy was the exact same. We had big government, big print and spend. We had a lot of bad ideas going on for literally 16 years. And thank goodness the U.S. economy still powered forward. We had a couple of rough years there from 2000 to 2010, coming off of the tech bubble when it popped, to 2008 and 9 with the financial crisis. We call that the lost decade. S&P 500 return was literally 1% total return, not annualized, total return for 10 years, because you had that major dip in 2000 and another major dip just 8 years later. So again, this is why you have to be careful what you're in. You have to know what you own and not just buy everything and anything and hope it works out. You do need to watch policy, because policy does matter. So 3 major scenarios that we could see. We could see a Republican Senate and House and a Democrat president. I think that is possible, not highly likely, but I do think it is possible. I actually had to rewrite this week's article because I was talking about Joe Manchin. He said he was going to enter the race. Now he says this morning he's not going to enter the race, and he will let Kamala Harris run unopposed. I don't think there's complete consensus, though, yet with Kamala Harris as the DNC, as the Democrats' primary candidate. there was a video that came out over the weekend from AOC, and AOC said she was in the room with some of the people who did not want Joe Biden to run and helped get him off the ticket. And they're not completely sold on Kamala Harris either. They're saying they could clean the ticket entirely, start from scratch, which is kind of crazy because they literally are doing their convention here in just a matter of I think it's a couple days or a couple weeks or something like that. So it's going to be very tough for them to have a true process, which is not good. It's literally like stealing the election and or stealing the nomination at least. And they did it to Bernie Sanders. I mean, everybody agrees with that. They took it away from Bernie Sanders, who probably was going to win the nomination, and gave it to Hillary Clinton, who lost big time to President Trump. Now they're talking that Hillary Clinton could come back. And so I know it sounds kind of ridiculous, but if you do some digging, if you read some of the articles that are coming out now, we could get a Trump Clinton rematch, which would be very entertaining, not overly great as far as, sometimes people think, how can these be our two candidates? A country of 330 million people. I know people don't really like Trump. Some people love Trump. People tend to not like Hillary Clinton. So it will be a funny season to watch. And so just enjoy it. It's not all about the presidency. What matters more is Congress. Certainly, there are some things that President Trump has on his agenda that will benefit certain sectors and will help the economy in certain ways. There's certain things in President Clinton's agenda that would hurt the economy. And I do think there are things in Kamala Harris's agenda that would hurt the economy and markets in the short term. But really what matters is the makeup of overall Congress. So assuming that we had Kamala Harris as the president, assuming we had her or Hillary Clinton, but we do have the Republicans with a little bit more of a majority in the House. Remember, it's super narrow right now. They only have it by 2 votes. The Senate, they would assume they get that back here in this next election cycle. I think probably what you see is tax rates don't go down, which is okay, but they probably don't go up. And that's a really good thing for markets. That's a really good thing for corporate earnings. Remember, your stock, your portfolio, your stocks, your 401k portfolio at work is all valued on corporate earnings. And so if you if you keep corporate tax rates the same, at least we don't have to worry about companies losing margin to higher tax rates. So that's a positive. I do think that we are going to see a good environment for equity markets with divided government. One of the less likely things that could happen, but it is a possibility, like I mentioned with the Clinton administration, is you might actually end up with less government spending and lower deficits that people really didn't expect. And if you have these two bodies kind of going at it here, arguing over the direction of the country, you may actually get it's going to be messy, but you may actually get a little bit less government at the end of these next 4 years. It is possible. I don't think it's highly probable, but I do think it is possible. I do think with divided government, and I know this sounds a little backwards, but I think you actually could end up with lower inflation because just not a whole lot of anything will get done. You're not going to get these massive print and spend agendas. You're not going to get all this stuff that you saw even under President Trump. Remember President Trump's, he had some really good policy on trade, really good policy on taxes and regulation reform. But one of the bad things was during COVID, we spent a ton of money. We passed these ridiculous print and spend policies, packages, and it led to some inflation. Now, Joe Biden did, of course, come in and add fuel to the fire and fan the flames of inflation by doing the Inflation Reduction Act, which is completely ridiculous. I mean, that thing did not have anything to do with reducing inflation. That's obvious. But the reality is I think with divided government, you actually could see lower inflation. Now, scenario 2 would be a complete Democrat sweep. I think this is the least likely of the 3 scenarios, just based off the polling data, based off of what I see with the betting markets, based off of what I see with the stock market. And I think really what the stock market is pricing in is either divided government or Republican sweep. Now, if you did have a Democrat sweep, though, I think what you would find with policy is you'd have a lot more regulation, a lot more deficits. You'd have choked U.S. energy supply, which would actually help energy producers. I think you'd see commodity prices rip. You'd see Exxon. Again, none of this is investment advice, but I think you'd see ExxonMobil, Chevron, Shell, BP stock prices go through the roof because they're going to be choking U.S. oil and gas production. But you're also going to see higher taxes. So it's almost like a teeter totter. If you want to weigh or a weights and measures, where if you want to weigh a couple of the bad policies against a couple of the possible good things, the only possible good thing in a Democrat sweep is you have these large stimulus bills that, again, not a positive long term, let me be clear, but in the short term would bolster markets. I mean, there's no question about it. Japan has passed these ridiculous big printing bills forever. It's called modern monetary theory. Now they have a 250% debt to GDP ratio in Japan. It's ridiculous. But that would temporarily offset some of the bad policy that would stifle organic growth. Remember, the economy is really relying on organic growth, which is new business formation. And new business formation is going to be based off of regulation and taxes. And so you saw this happen. You're like, Nick, you're just making all this up. I'm like, no, I actually have a real example of this. So Javier Milei in Argentina, the Argentine stock market rallied 50% on the hopes of smaller government. You remember the blackboard where he's going one by one across the government departments, ripping it off, saying this one's done, this one's done, this one's done, trying to get inflation under control. The Argentine stock market loved it. They were like, all right, this is what we were hoping for. The opposite happened in Mexico. You had Claudia Sheinbaum, who is basically a socialist. I think a lot of people believe she was put in there by the cartels, but she was elected and the Mexican stock market sold off over 22%. So markets reward good policy and punish bad policy. I'm not speculating that the economy or the stock market would plummet long term under a Democrat sweep. I'm just saying there's a high likelihood, just based off of history and easy analysis here, that would show stock markets selling off in the short term. So we do have to be aware of that. However, in the long run, remember, you're going to have another midterm cycle in 2026. And so by the time, if the Democrats do sweep, and let's say they have all this policy that's highly unfavorable and not liked by the country, by the voting base, then there's a good chance the Republicans come back and take some of the seats back in 2026. And then you're right back off to positive markets. So again, if you have a Democrat sweep, you could see a downturn initially, followed by an uptick as we go into 2026. So again, I think this is less likely than the other two scenarios, but it is a possibility. And then last but not least, you could be looking at a Republican sweep. That would be where President Trump wins back the White House, and then the Republicans win back the Senate and keep the House. That is possible. It's going to be tough. I do think the Senate is a little bit of a tougher bet than people realize, but it's a little bit easier now than it was a few years ago. So there's a chance you get a Republican sweep here. Obviously, the polling data looks very good for President Trump against President Biden. But, again, we've seen some initial polling with Kamala Harris here, and President Trump absolutely smokes Kamala Harris in the polls. It's unknown at this point how he would do against somebody like a Gavin Newsom, against Michelle Obama, against some of these other people they throw out there. But I will say, I don't know if Michelle Obama really has her heart into it. I really don't know if this is something she wants to do. It's a really tough job. It's a really stressful thing to do. And I think I just don't know if I see her running. Obviously, the other options would be somebody like Gavin Newsom, although Gavin Newsom could actually put this idea of running for president on pause, saying, hey, Democrat Party's kind of in shambles right now. There's a lot of questions that we have to answer. And maybe he'll just let Kamala run against Trump, assuming she loses, and then he'll come in the next election cycle. That's a possibility as well. So all things considered, I do think Trump has a very good shot at winning back the Oval Office. So if that happens, assuming it's a Republican sweep, President Trump is probably going to reduce tax rates. He's talking about cutting the corporate tax rate from 21% to 15%. At that point, I mean, that is a really good thing for markets. We just had somebody on Bullish, Sam Hardy and myself, recorded with Kevin Simpson, who said that he's done studies and said that tax rates really in corporations should be zero. They should use that money for CapEx, paying their employees, for reinvesting. And if you saw some of that happen, then the economy would really take off. I think if you have tax rate cuts, you're actually going to see higher federal tax receipts, meaning the government's going to collect more tax revenue. And you're like, Nick, how does that even work? That's completely backwards from what I would have thought. But that's literally what happened during President Trump's first time in office. Was he cut tax rates, and because so much money was repatriated, because so many companies came back to the U.S. and built factories and plants here and expanded their businesses and reinvested in their companies, we saw one of the best environments for the government collecting taxes ever. We actually saw higher tax receipts under President Trump than before, with higher tax rates. And so this is a positive, I think, for markets. I think you're going to see regulation decrease. One of the things that President Trump always talks about is how regulation reform is much more important to business than taxes. Taxes are something that's built in as a cost. And remember, you could set the corporate tax rate to whatever you want. The corporation is just going to pass that down to you as the consumer anyhow. So, if you want to spend $30 more for gas and $5 more for toothpaste or whatever it is, then sure, increase the corporate tax rate. The corporation is just going to pass that input cost to you. The more important thing is regulation, because regulation helps you start new small businesses, and small businesses, when you have a true capitalist environment, not crony capitalism, that's very important, but true capitalist entrepreneurial-led growth, what you're going to see is disruption. You're going to see these legacy industries get replaced by new and better products and services. And anytime you have that, anytime you have entrepreneurs leading innovation, what happens is prices come down, inflation moderates, technology brings down inflation. The only bad thing I see under a Republican sweep is you could see some really big print and spend bills put forth. And I don't think President Trump would have done this without COVID. Remember, we printed a ton of money to combat that. So it's a really big what if is in the air, is how much money do we print under President Trump. But it's possible the deficit goes up. And I think you're looking at most likely a Reagan-esque scenario where you have three really good things happening and maybe one or two bad things. One or two of the bad things might be tariffs, might be the print and spend, the deficit's going up. However, you probably have enough good things to outweigh that, where you have good taxes, you have reasonable regulation, and the economy does really, really well. So I'm not telling you my personal opinion on what I would like to have happen. I am small government. I am libertarian in the sense that I think the government should get out of the way of everybody. I don't think we want to have a big government at all, because the bigger and bigger government gets, it stomps out all of us. And we're all, like Elon Musk said, on Team Humanity, which is the 1984 Orwell government stepping on the stomping on the face of the individual. We shouldn't want that. If you're on the left and you have a certain set of things that you care about, you don't want big government, because if government's too big, they are going to stomp on you eventually when the people you don't like are in power. And the same thing goes for the Republicans. You shouldn't want big government, because the bigger and bigger government gets, the less innovation there is, the less creativity there is. And so we should all unite on the simple fact that government should shrink, entrepreneurs should increase, the individual should increase, and that's how we all get to better outcomes. So that's my only take on the political environment, is let's vote for good policy. Let's vote for policy that's going to reduce the size of the federal government, that's going to get us out of these endless wars, that's going to get us out of this nonsense where we just are constantly spending money on the military industrial complex, and we're printing all these new dollars into the economy. Let's get to a balanced budget. And we can do it. We've done it over time. We had really, really bad deficits in the 50s and 60s and the 70s. And what did we do? We begrudgingly paid our debt down. We got to a balanced budget. We shrank the size of government. And I think we're going to have the same thing happen, even if it takes a little bit longer. It takes a couple more years. And I'll leave you with this, but the interesting reality of the political environment is the famous question: are you better off today than you were 4 years ago? And so a lot of people are going to have to sit there and answer this question in the polling booth or the voting booth in November. Is my family better off? Am I better off? Are things better in general for the economy than they were under President Trump? And I'm not going to make a judgment call about that, but that's what people are going to be voting on. And if you go off of that, you have one of the first environments in U.S. political history where you literally have not theory or guesswork about what the next president's going to do. You have actual results. You had 4 years under President Trump to say, this is what President Trump did, and here were the policies he enacted, and here's how things worked out. Then you have 4 years of President Biden. Here's the policies he enacted. Here's what President Biden did. And here's how that worked out. And then you can compare and contrast those two things. So it's going to be a very interesting season. It's going to be a very interesting election cycle. I am focused on at least divided government. I really am not focused on the presidency as much as a lot of the political pundits would be. I think as long as we have divided government, we've got some checks and balances. We've got checks against crazy print and spend bills. We're going to be just fine. We're going to see markets take off. And typically in that first year of the election cycle, which is that'd be next year, 2025, that first year, markets are 85 or 90% of the time positive, and they're positive to the tune of 12% on average. That puts us at 6,300 points on the S&P, which I've been telling you is the fair market value for the S&P if you get $315 in corporate earnings by 2026. So just stay on your plan. Don't panic. I think we're going to have some downside before we see the upside. You'll get through it. Everything will work out, and just focus on the math, the underlying fundamentals and policy that drives markets and the economy forward over the long run. Thanks so much for being here. Episode 157. We'll see you next week for episode 158.